right, good morning, everybody. Welcome to the St. Louis podcast for January 31st, 2023. I'm one of your glorious hosts, Garrett Atkins, the CEO of iMedia, founder of Half Coast Studios, West County Insulation, writer for Forbes.com via the Forbes Agency Council, and I'm alongside my host, a managing partner of iMedia, West County Insulation, and the winner of the Best Beard in the Midwest with GQ Magazine 69 years running, Eric fucking Brown. Eric, how are you today, sir?
I'm doing pretty well. I can't complain. It's been a good week so far. Got a lot of meetings on the calendar, so I'm happy. I'm a happy man.
Yep, same here. We've had a busy one. Today we have Greg Aftayev, president of Homestead Financial Mortgage, on the St. Louis podcast, and we're going to get into the weeds with him and his business and other topics. But before we do, this is the St. Louis podcast where each and every Friday at 7 a.m. Central Standard Time, we drop an episode of the St. Louis podcast on all major podcasting audio and video platforms, such as Spotify, Apple, YouTube, major social media platforms, and more, where we interview a new or recurring business badass, figure out their story, talk about current events in a very uneducated manner, and things you can do to be an even bigger badass in the world of business. You can watch the show live or later on youtube.com/the St. Louis podcast, just like Katie Baker and Matt Parker is right now. But ladies and gentlemen, if you're watching live or later and we say something wrong, say something you hate, or say something you want to hear more about, you can visit us at stlouispodcast.com and leave us a message telling us all about it. Now let's jump into it. Greg, how are you today?
I'm good. I do have one question.
Yes.
When you were talking about the things you own and the things there was probably, 6 or 7 different?
At least 20.
You forgot raising the support llamas for travel, and I think that's important. You've done a good job with that, and why just stop there?
Right? Yes. Greg is talking about a very existent llama nonprofit organization
to
we're
go
running.
with your Airbnbs that you had, and I think the llamas are in the Airbnbs. You're so entrepreneurial, you guys.
Thank you.
We're thinking of starting a petting zoo as well with those llamas and Airbnbs.
Well, yeah. Well, once we started putting the llamas in the Airbnbs, and they're very spacious Airbnbs. I mean, like 500 square feet. You can fit a lot of llamas in there, and so we were thinking we need to profitize them in some way. We bring the kids in.
I own one
zoo.
stupid company, and you've got like 90 of them. This is kind of like a motivation thing for me.
I didn't name 3 of them if it makes you feel better.
Fire away with your questions. I don't know what quality I'm going to bring to this table.
You're going to bring plenty of it.
Clearly intimidated.
That said, we have a little bio on our guest, Greg Aftayev. Again, he is the president of Homestead Financial Mortgage. And Eric, if you want to take it away.
Yeah, just a quick bio. Greg started mortgage company now known as Homestead Financial Mortgage over 25 years ago. Grown into 6 locations across Missouri, Kansas, Illinois, and Texas. He's also a 5 handicap golfer. Has that gone down since I last talked to you a couple weeks ago?
Trended the other way.
Oh, going the wrong way.
Yeah.
Okay. We need to get back.
Did I ever say 5? That's wow.
Maybe some of your friends are giving you a little bit too much credit. Well, and leading us off, I did want to know, obviously a lot has changed with starting mortgage companies. You know, how did that process go when you originally started that 25, 26 years ago?
Well, when I was approached to start this mortgage company with my partners, Jason Hardy and Andres Iocamides, we had been in the business maybe a year and a half. There was very little entry of barrier as far as what it would take to have your own licensing. It was a little bit of assets, but there was no training. It was one of the few mortgage companies in town in the beginning. So there wasn't any education. There wasn't any sponsorship. We were working for another mortgage company, and it made more sense to consider doing it ourselves because they didn't know what they were doing either. And simple economics said, if you believe in a cause, which we believe that we cared more about our people, that the client came second, then maybe we should do a run of this ourselves. But going back, over 2.5 decades, there was probably maybe 25 mortgage companies at the time. So it was hard to compare to say, do I have something good or do I not? So we took the chance. That entrepreneurial side of me, which has always been there, was probably the biggest reason why we said, let's give this a shot.
Sure. One of the things we want to get into today, because it is a very glorious time in some ways, in a very negative way, but the mortgage industry was in some ways a lot of fun, in some ways really fucked up, and most definitely very different before the 2008. That said, what's like the one or two craziest things or situations that you took a part of back before 2008 in the mortgage industry?
I was very thankful to have very grounded partners with an accounting background that had the underlying backbone of to continue to reinvest in our organization. Money came very, very quick without a whole lot of due diligence. So you had people saying, I'm going to go buy a boat, and I don't like boats, but I want 2 of them.
Sure.
And you saw so many different mortgage companies that,
they don't even have a lake house, but fuck it. Let's buy a boat. We're in the mortgage industry prior to 2008.
They were bartenders. I was selling TVs at Best Buy or whatever they were doing. And next thing you know, they were making $200,000, $300,000, $400,000 overnight with no knowledge of what good fiduciary responsibility it is to a customer, how to budget, what would be the right term, all the things that you learn as you get older. One of the things, being as young as I was early 20s when I got into the mortgage business.
Exactly how old were you when you started it?
24.
24 when you started?
No. In the business, 24, 25. God, I'm dating myself. I started when I was 29. I think we started our mortgage company when I was 29. Yeah. The ego didn't follow till later on.
When you started seeing, that's actually a good thing to talk about.
Douchebaggedness. It came later. It's here now. I mean, complete douchebag. Douchebag right here. But as you got older, we call it the D's. Okay, so there's diamonds, diapers, divorce or diploma. Some of those come before or after disability, but having children of my own and understanding where I am in my life made me better partner to clients in terms of what would be the right product, what would be the right budgeting, what would be the right amount of house to buy. So in the beginning, it was all about finding people money to pay their bills or do whatever they wanted. There was no recourse as to what a home was worth. It was, we all have our theories as to what happened. In mine, it was appraisers had full range of motion as to determine what they were going to appraise a home for. So if they could appraise a property for $300,000 or $400,000 when it was really only, $250,000.
Sure.
That's where I think the problems happen. That's when people were always assuming that their home was an ATM and they can continue on with that process.
Yeah.
2008 wasn't just humbling in terms of the market turning and the reestablishment of how things got done, but it was also our education. Now we had to grow up and go to school. We had to be properly trained, vetted, backgrounds, all the things that took all the people who were unsavory out of the business and made it a profession.
Sure.
Something that you could say, I'm a mortgage professional. Before that, it was, I did mortgages.
Yeah.
I bartend and I do mortgages.
Yeah.
I got a guy and, so it was, I'm glad.
Yeah. So Eric and I listened to a comedian by the name of Tim Dillon. And Tim Dillon was in the mortgage industry prior to the crash when people could pass the test and go become, multi 6-figure earners very easily.
Was there a test back then? Was there accreditation?
Yeah.
There was a test.
It was a test, yeah.
Okay.
Was Tim Dillon, does he talk about like old people watching Fox News?
He talks about it all, but
it's gospel, like anytime they say.
But he is an independent. He is not Republican or Democrat. He makes fun of everyone, and rightfully so.
Yeah.
That said, he was talking about talking about life as a mortgage person before the crash. He was making a joke. He's like, man, whenever I met with a client, it wouldn't be about whether they're going to get a loan or not. It'd be about how big of a loan I could fucking get them.
Yeah.
He'd sit them down and be like, listen, what we're going to accomplish today, Mr. and Mrs. Homeowner, isn't if we can get you a loan. It's if I can get you the biggest loan ever. You're going to get your dream house today. You know, if we can get $700,000 out right now, and I can promise you, you won't make a payment on that house for the first 3 to 12 months. Wouldn't you like to be in that house? Yes, Mr. Homeowner, we're getting it done. Was shit like that happening around you or at the companies you worked with? Or did you know of people doing that at other companies, like doing that kind of stuff because you could, because of how lax the regulations and laws were around the industry back then?
We knew at one point in time that, you know, we were going to have to clean this party out. And we were getting to a level where we were loaning out our own money, doing some correspondent lending. So we lost a lot of people along the way, very talented salesmen, that we could not push certain products because of the altercations as to what would happen. Prepayment penalties, the overindulgence on an appraisal. So we dealt in the biggest sin that there is, and that's greed. Mm-hmm. Right? So you're talking about,
for sure,
you know, you could pay off a first mortgage, a second mortgage, $20,000 in credit card debt. Oh, here's $10,000, and you won't make a payment for 2 months. Whereas, what about taking all of that money that they are saving and pay it back strategically? So I'm saving you close to $2,000 a month. Let's put you on a 10-year, and you're still saving a handful of dollars. Now, we would have people that would refuse that. No, I want to save as much as I can monthly. You know, that's entirely up to them. But that expression of being dumb enough to listen to us, there was a fiduciary responsibility. That's what the education process was. But deep down inside, you were taking so many of these people, their want for constantly to refinance, they were in a burning building and they were on the 4th floor. And the only difference was you were just taking them to the 6th floor or the 7th. It was just a further jump down.
Sure.
So when we decided that we were going to do correspondent lending and things that were involved with audits.
What's correspondent lending?
Well, we loan out our own money. In layman's terms,
You're the bank.
Big master, it's a big credit line of credit. We satisfy an obligation, then we would assign the servicing to a bank who would like this. There's banks that are looking for mid 600s. There's banks that are looking for high credit scores, certain amount of money loaned out. So we would take these parcels, and that's where we would profit. That's where we would make our money, by selling off the servicing rights.
Okay. Selling the notes?
Yes.
Gotcha. And for those of you who don't know, a note is basically another term for a loan.
I don't know what that is, a note.
Yeah. Well, you know, but.
Not really.
Oh,
I have people for stuff like that.
Yeah. True. All right. And one thing I did want to make clear, because, by the way, guys, I don't own or plan on starting a nonprofit around llamas or Airbnbs. That was a joke.
That wasn't a bad idea. It's
not a bad
opportunity
idea
for someone else.
But yeah, good. I'd go do that. If you're trying to learn from this podcast, that's the first thing you should go do. That said, Greg did humble himself at the beginning. Eric brought up, he's been doing this for over 25 years at Homestead Financial Mortgage, and he actually has a pretty sizable team. How big is your team over at Homestead Financial Mortgage?
In terms of originators?
Just in general, the whole team.
About 140.
Yeah.
We're a mid-sized company.
Yeah.
Not a big company, but mid-size.
And most of the people listening to this, I mean, lots of people find themselves stuck at, if you're talking about a solopreneur, they're finding themselves stuck before they could breach 500,000. Or if you're talking about a small team of a few, they're having a hard time breaching 1 million, let alone getting to the 10 million mark or 5 million mark or 100 million mark. That said, lots of that. Obviously, if you have money, you can afford more employees. You have 140 plus team members. That's a sizable team. That means you'd probably be a good person to ask the following question. What is your best piece of advice for someone listening that is a business owner or aspiring to be one for breaking past the 500,000 a year mark, the million mark, or maybe the 5 million mark, if that's somewhere where they're struggling to surpass?
When you say the 5 million mark, are you talking about like a revenue stream?
Companies that are stagnant is basically what I'm getting at. Like they've been stuck.
Companies in my industry,
in general as an entrepreneur.
Okay. Well, in our organization, or to develop our own talent, that's probably been our biggest strong suit. Is the culture we have is that all of the owners still originate. I can't tell you to go do something that I can't do myself.
Mm-hmm.
Much to your credit, you own something, but it owns you.
Yeah.
Proudly. You're learning as you go, and you're bringing this to your group, but you still meet with me. As a client, I can reach out to an owner of a company. I think that says a lot. To have their employees do the same thing, that creates the culture.
Yeah.
So I guess not focusing on those numbers. Those numbers can possibly happen. Making sure each one of your clients, or which I do refer to my people as clients, because the client comes second. But if I make sure my people are happy and motivated and have all the tools that they need, what could they do next?
Yeah.
So that good communication, not to focus on the numbers, but focus on the individual.
The individual team member?
I have individuals that close 4 loans a month, and that's the most that they can do. But I've maximized that person's talent. Now,
sure.
There's people in our organization that do 20.
The ceiling is just higher on one person than it is on another.
But I find them both equally successful. That person is incredibly happy, had been with other companies before. They got people in their corner that they can reach out to at any given time. And to say that I was doing maybe a loan a month and now I'm doing 4 loans a month, you take that and run.
Yeah.
So it's the individual, not just that corporate feel.
Agreed. And I think that's what a lot of people, there are exceptions in the tech industry when it comes to AI, software, et cetera. But I feel like a lot of people lose sight of the fact that companies are nothing more than the people in them. Like that's what makes up a company. That is the company. That's who's doing the work, communicating with the clients. I know that won't always be the case because a year from now we'll all be working for robots. But until then, and in the history up till now, it's really all but the people who make up an organization and who make the experience work or not work.
We have our share of tech bloat too. And I think technology is good. But if it's not feathered in with state-of-the-art customer service, it doesn't work. We've got so much of it that half the staff doesn't use some of the things that we have because they would rather reach out to a client and say, your appraisal came in or ready to close. You can do all that digitized, like Domino's.
Yeah, click a button.
Joe, put your pizza in the oven, right?
Mm-hmm.
Tom, put it in a box. It's coming right to you. And you're sitting waiting by the door. But where are you going to develop referrals? It's the little conversations. It's the little things that you build that bond. You call that client's home, and there's kids in the background screaming. That's a great conversation to have because I have the same thing. We all have,
I just hang up. But.
Yeah, we don't have that
The thought
issue.
of you guys having kids, one is scary, but I don't think it's ever crossed your minds, has it?
It's crossed my, actually, that's like part of my entire driving force.
Dogs don't count, Garrett.
Oh, well, then never mind.
Nor do llamas.
Well, no, that's part of my, that's like the core thing is being able to provide for family, friends, and future family directly, like kids, wife, whatever. So,
I used to work a lot with your dad, ladies and gentlemen. I used to work with Garrett's father quite a bit. We go way back. What is he doing now?
He's an appraiser over at Quicken Loans.
Okay.
So, and he's loving it.
He's a happy muskrat. He's the muskrat.
He's him and my mother are doing rather well. I think my mom's doing, she's working for like some big ass insurance company in some supervisor / managerial role.
They're still together?
Oh yeah.
My money was on it. Wasn't going to happen. He wasn't happy. Whatever. Things change.
Me too. I didn't think they'd make it. Kidding. Love you guys.
Thanks, Mom and Dad. Yeah.
Glad you did make it.
So I did have a couple questions about going back to mortgages, if we can.
Yep.
You done with the business questions for a second? So I did want to ask. So last year, 25% drop in Missouri on new home loans.
Yeah.
Compared to the previous year.
That number is wrong. It's probably even more than that.
Really?
Oh God, yeah.
Okay. I saw 27. It was like 27%. So what do you think? If that's accurate.
You can't just do a poll on Twitter when you have 25 followers.
Hey, I got this from imright.com. Okay. That's a good website. Now, what do you think, if it was 25% last year, what do you think it's going to be this year? Is it going to continue to go down?
Well, I think compared to last year, you're going to see an improvement.
Okay.
Because everything is stabilized. It's not necessarily that the rates are going to be better.
Mm-hmm.
You do expect them to be good come the beginning of fall back into the 5s. The 3s are gone. But we were down more than 50%, which was very difficult because there was subject to layovers, different cost-cutting measures. There just wasn't a lot out there. You had a 2.5% mortgage, and you might want that other house, but you're not willing to leave that 2.5% mortgage to go close on 6.
Mm-hmm.
Now, although you can show arguably it's a wonderful market to be in still, because this house in Baldwin that listed for $350 back in 21 sold for $400. Now that same house will sell for $340.
Mm-hmm.
So $60,000 swing on a 3.5% or 4% interest swing, your payments are almost identical.
Yep.
The difference is you don't have a big loan size, and you can always restructure that financing. You could always rewrite your loan anytime you want. Prepayment penalties are a thing of the past, the things that we were talking about earlier, things that would prevent somebody to rewrite their loan because they couldn't afford it. Penalties, early withdrawal, that kind of thing, in a roundabout way. But now, securing that financing at a very decent interest rate, this is quite normal based upon the history of mortgages in general. We are right where we once were, less than the average. So that's where there involves much more communication.
Didn't housing pricing make more sense though when interest rates were, say, 20 years ago when they were at, similar interest rates? Housing prices made more sense compared to the money you were making versus
correct
now, because prices are still arguably higher than they should be. I mean, you just look at, like, you go on Zillow, which the housing price is terrible on Zillow, but you go on Zillow and you look at the improvement on pricing since 2020, essentially, and they're still up a ridiculous amount in terms of price.
Yeah, it's still echoed.
Yeah.
Yeah. The pricing is better. It's still there's still a tremendous amount of equity in that home. And keep in mind, back in 21, and you were looking to refinance your home, let's just say in 22, your home was worth almost $50,000 more. If we all lived on the same street and Garrett left and he sold for $300, you and I both thought our homes were $250, so did he. Now that's a verifiable comparable for us to consider. So the housing market is still escalated, but it's leveling off. Why it's not leveling off quick enough is inventory is at an all-time low.
Sure.
So if inventory would pick up, you're going to see most of that pricing come back down, which would make it even more favorable.
Yep.
They say the big money is going to come from baby boomers that need assisted living.
Sure.
So when you see an older person like at Deerberg's, give them a hug and go, "I'll see you soon." But that's where the majority of all your homes are coming from. So you're going to see more and more of that as the near time goes by.
Yeah. I think another thing with housing prices and the fact that there, say, isn't a lot of availability right now. Obviously, building almost doesn't make sense right now with costs, and then that going to the home buyer. It's like everything's skyrocketed. How are you even building right now?
Yeah, the biggest problem we would have is somebody did a build prior to this big increase in materials, and the builder would lean back on them and say, well, "This is renegotiated."
Yeah. Yep.
Oh,
or we'll let you out and we'll go sell it for something else.
Yeah,
that'd be a bitch.
I've been talking to
really
people.
Rude.
Yeah.
It's not nice.
Yeah.
Well, other people in the mortgage industry, they're saying, new home builders, they used to get, say 10 to 20, they'd be building 10 to 20 homes a month, and now they're 2-3 homes. And obviously you could see why that would impact bottom line, obviously you guys, and closed loans when those houses aren't being built. But on top of that, what about like hedge funds, investors that own hundreds, thousands, tens of thousands, hundreds of thousands of homes? I'm kind of getting to the point where it might be naive or stupid thought, but it's almost like, does it make sense for a person or a business or anyone else to own thousands of homes?
Yeah, it's very good. And I'll tell you why. It's because there's no places to live. And you have to either go to an apartment or a home. And all a home is really just a big apartment. You don't own it. And pricing will still continue to increase. So you're talking significantly $200 or $300 more to rent than it is to have an actual mortgage.
Yeah.
So these companies that bought in bulk, they would have real estate agents go out and buy blocks if they possibly could. We sold to, we had a small parcel, half dozen, and an investor picked them all up with the exception of one.
Mm-hmm.
No questions, no. The weirdest thing, it was a corporation and we rehabbed the homes. We had brand new washers and dryers in them. So 6 months later, we sold. One guy didn't even use his, but the guy says you have to take them all out.
Interesting.
Have to.
Take the washers and dryers out?
My garage looked like the Slyman Brothers for a minute. Facebook Marketplace.
Yeah,
Did
no
he
doubt.
tell you why?
It was their policy that they would keep the refrigerator, but not the washer.
Maybe it was a hygiene thing.
Washing dirty money is what I would guess.
Perhaps. Or those big pubes that are in there. They don't
Yeah.
want that lint filter.
Yeah.
Filthy people.
Something I have to deal with all the time.
You look like you're a clean-shaven man.
Yeah, I am. Actually, just 2 days ago in the bathroom over the toilet.
You look like you shave once a month.
Thought we were talking about shaving elsewhere, okay? It's different than my face. All right, that said, did you see any similarities between the mortgage industry now as it stands as opposed to leading up to 2008?
AKA, is there a housing bubble?
No.
Okay.
No, I don't. I think it's completely different. For one thing, we're a lot smarter as to how a file gets underwritten. When you talked about AI, the software that will underwrite a file, the majority of it's done through that. And it's warranted by Fannie and Freddie. So there's, with the exception to a self-employed loan, we can underwrite a file in almost 20 minutes as long as we have the documentation. It's all done artificial intelligence. So there's also ramifications. There's collateral underwriters. So there's a system that will evaluate an appraisal and say, without exception, it could not fall any further than this. So they put a ceiling on the liability where before, in 2008, there wasn't a third party to verify what an appraiser did. It was just his opinion. You get 5 appraisers on one property, you're going to get 5.
And you're talking about back in the day, right?
Mm-hmm. So the difference is that...
Which is a big part of what, many variables created the problem that happened in 2008, but that was one of the big ones right there, is the lack of regulation due to the Dodd-Frank Act, correct?
Yeah, it was the wild, wild west with no recourse. But we were all too busy originating to think what...
Oh, why ask questions when you're making cash hand over fist?
Well, it was somebody else's parameters. We were
easy way to stay ignorant, yeah.
They give us 10 steps. We fill those steps. So if that's the appetite that they had, that was the appetite all of us as originators were providing.
Mm-hmm.
Did originators back before the Dodd-Frank Act and 2008 and the other changes that happened under, I believe, Obama, if I'm not mistaken, were originators aware of how fucked up things were?
I just think of the
Or
Big
were they
Short.
unaware until it happened?
I think for the most part, nobody thought that this was ever going to end.
It was just going to be a hot industry to be in?
Yeah, party never ends.
But, I did. I just knew that some of the loans that they were writing were very West and East Coast. For example, there was a negative amortization. So every time you made a payment, you made it a portion of the payment. So the difference went towards the balance that you owed. So you actually owed more than what you started. But on the coasts where it was so aggressive, let's just say you're doing a gig with a company for 2 years. It was a great product to be in because you'll pay a fraction of what the payment would be on a traditional mortgage, and you're going to make money when you leave.
Sure.
So they weren't regulated in terms of people thought cheapest possible payment, I'll worry about it later.
Yeah.
So those are the things that kept us up at night. Saying,
Gotcha.
Somebody's going to come looking for this.
Well, is it true that they didn't even verify income? I always think, I don't know if you know the Big Short part of the movie.
I doubt he's heard of it.
I'm sure. Have you seen The Big Short, the movie? Yeah, I'm sure you have. Anyway, so
he literally just asked seriously,
so the
unironically.
Scene, so hold on, the scene.
The name of that again?
The Big Short. So the scene where they go and they talk to the two guys and they're like, "I'll introduce you, to the stripper or whatever." Yeah. That whole scene.
And then eyes just lit up like, what the fuck?
Yeah, they literally were asking like, no verification, blah blah blah, and you could see it in their faces that they had no idea. And like the loan originators had no idea. Meanwhile, obviously, the guys that the movie surrounds it with obviously knew immediately right then that if everyone's doing this, we're screwed.
Yeah.
That was an incredibly crazy appetite. There was two types. There was a good credit stated income and a not so great stated income. Now you have somebody who's never missed a payment in their life, but they might sell heavy construction equipment or whatever. And their documentation was difficult to verify. But they paid everybody on time, had a lot of money in the bank. There are certain investors that said, okay, bump the rate 1/4 of a point and then just give them the loan.
When he says a point, he's talking about a percentage, like a 0.25
Correct.
of a percent.
So if it was 5%, it would be 5 1/4. 5.25.
5.25 points.
Okay. Now, there was other ones where these investors would say anything in the mid 600s or the low 600s. That means I got a lot of debt. I don't pay it on time. So how am I supposed to state on an application that you make $15,000? You had to state the income. But if you were making that, you shouldn't have those problems. You should have credit like the other person.
Mm-hmm.
Those loans, they were literally on fire before they began. If I couldn't afford what I had now, and banks were still willing to take that chance, it was a product of a good economy too.
Yeah.
When you talk about how much money that fed into the markets,
Yep.
they talk about, what it did to the housing market. But if you look at the time, the economy, what it did in spending, it was much like, well, nothing's like COVID, but it was in and around that whole concept.
Sure.
You're giving somebody thousands of dollars. What were they doing with it? Investing it?
Mm-hmm.
Flat panels, which we talked about the other day. I bought my first flat panel when it just came out.
What the hell's a flat panel?
Flat panel. TV.
Oh, flat screen. Gotcha.
Big Short, flat panel.
Yeah.
Got it.
Flapjack? What?
42-inch Sony flat panel TV was $5,000. Do you remember that?
No.
I don't remember.
What's a 42-inch flat panel now? What is that?
Oh my God.
It's $11.
Yeah.
I knew I was tricking you. It was $11. Had to have it. Nouveau riche Greg.
Well, I did want to get back to some business stuff outside of mortgage specifically, because even though you lead a mortgage company, there are some similarities in strategies and marketing strategies in various parts of being an entrepreneur that are applicable between you and someone who's leading a marketing company, an installation company, et cetera. That said, what are two things? One, what are some tried and true marketing or team building strategies that have worked for you and your firm throughout any point in your career, like certain tips they should pay attention to regardless of where the market's at in their given industry?
I think the thing I'm most proud of that has been a staple in our organization in some capacity was always our client service department, which in essence was communication. People who were paid to communicate without hesitation and on a regular basis how our clients are doing. Could we help them again? How is their experience? It was all about feedback. And it's the one thing I think that most mortgage lending has gotten away from is I can send an application to a client and literally never speak to them until it closes. What a waste.
Yeah.
Teaching and having those experiences like you have with your clients.
Mm-hmm. Yep.
If you're not doing that, then you better hope the tech bubble doesn't get big.
And actually, I want to comment on that because I was reading a book. I believe it was called The Lean Startup. I don't know if I know you've heard of it. I don't know if you have or not. You've read it?
Yeah.
Okay. Well, I listened to it because I can't read. That said, thank God for Audible.
Hard.
Yeah, it is hard. That said, in The Lean Startup, they made a good point of the steps you should take in regards to customer service, which you've mentioned twice now, because I basically asked the same question twice, is that customer service and the way you treat a client is extremely important to your company. And obviously that's an applicable statement to all companies. That said, whenever you're smaller, my piece of advice for business owners out there is until you're a big company, don't act like a big company in regards to customer service. For example, I've grown a lot me and my company have grown a lot over the past 5 going on 6 years. However, I'm still able to make time to meet with clients. So I do, because that is a better customer experience than putting it on my team members every single time and just having free open spots for doing nothing on my calendar. Whereas a new company should be spending as much time with their customers, figuring out their needs, wants, and how to make the process better between their company and the end client, and the process and communication between them a lot towards the beginning or the start of a company when you're still a solopreneur and only have 2 or 3 people on the team. And slowly but surely make sure, like Greg was pretty much saying earlier, first time I asked him that similar question, was that you want to invest a lot of time in the individuals at your company and making sure that you don't lose the culture of communication between your company and the client. And that one of the big problems, and the reason I say that is because one of the big problems big companies have is when Amazon first started out, for example, and I don't know if this is the way it worked. Let's say Jeff Bezos was on the phone with the customer dealing with their problem. He probably would have done a lot better job than the customer service rep you will now speak to over at Amazon should you pick up the phone and talk with customer support. But that's just a byproduct of getting larger, is that the customer service quality and process gets watered down as you grow. So don't rush into that by any means, and make sure that you're spending as much time with your end user or client as possible and making sure that process is smoothed over.
Well, I mean, we talked about that today. Communication in terms of marketing companies. That's one of the 3 biggest things we hear of about issues dealing with marketing companies is not being able to get a hold of whoever, not answering emails, not answering calls. And it's like, that's such a simple thing to fix.
It's different in marketing. We just have them sign the contract and then we block their number. But for other industries,
good practice.
I mean, it's surefire. It's an ironclad contract.
My llama's limping. Yeah. You're getting a dead son.
But in reality, that's basically how a lot of companies feel marketing companies operate, is what I just said, even though we're joking, is like, and they sign a contract
we'll see
and
you
they
later.
have no idea what the hell is going on. And even when they meet with them, they're not talking about the right KPIs, key performance indicators, such as how much am I spending as opposed to how much I'm making back.
But you know, some of the things that you talk about when you had said before, if you're not a big company, don't act as, and I'm paraphrasing, but I think no matter how big you get, there should always be some type of person that reaches out to that client and not taking that particular relationship builder's word for it, having somebody else come in and reach in. For one thing, it keeps
account management. Yeah.
Okay. This is a perfect example, and we don't need to name names, but I am a client of yours.
Yeah.
And you could tell well before that I wasn't particularly happy with this communication. You gave a young person an opportunity.
Yeah.
And that person didn't understand your code, your unsaid code.
That perfect example.
You take phone calls, you call back. You don't take it right away, you call it back. Communication has to be there, because without the communication, especially in my business, you're dealing with the most important thing, somebody's current economy. Am I making a mortgage payment this month? Am I closing? Did everything go okay? Go ahead and not return that guy's phone call.
Yeah.
Panic ensues. And then harsh words are spoken. So it wasn't uncommon when we were very small. I'd get a phone call saying, Eric hasn't returned any of my phone calls. This is just crap. Turns out Eric was just gone for a couple hours.
Yeah.
Now we've got the technology where he could be in his car and take that phone call. But, as soon as everything was okay, you almost wanted to flip it and go, I'm going to talk to Eric about that. That's unacceptable. I know he's got a kid on the way, but he's gone. No, he was okay. No, I'm not having that anymore. And you could flip it. But, there was a stress. There was a general stress that person had. Mm-hmm. Now I'm not much different. It's nice to be the customer once in a while, but to make sure that everybody has that experience doesn't make a difference if you got the magic mousetrap. If you've got the best mousetrap, but nobody knows when you're going to call back, how to explain it, then, it's not a good company. You just have a good product.
Sure. Yeah. And no, Greg brought up a good point. He was not speaking in hypotheticals, by the way. Greg's a client. We were working on a project together, and I was trying to onboard a new team member into our culture. And and trying to off-put some of my own communication chain with clients to someone else on the team. And it just did not work out. And sometimes that's going to happen regardless of whether you're good at building a team or bad at building a team. You just have to stay out in front of it. And had I not stayed in communication with you, reached out to you and figured it out, I mean, I've known you for a while, so it just took me, I basically just felt it, interjected and fixed the problem as quickly as possible and put you in communication.
But if that changes, then you're going to stunt your growth.
Yeah.
So as you guys develop, there better be more Erics and there better be more Garretts to make sure that they can pick up on that. And it's really with that client service department that we have, it's how is your financing going? But not only that, but why did you choose us?
Sure.
I want to make sure that of the 75 loans that came in that week, why did they take us versus anybody? Was it our pricing? Was it our closing costs? Was it our...
What do you find to be the usual answer for that? Or is it all over the place? Do you have one?
Yeah, let me interject. How do you differentiate yourself? Because I'm reading the 22 Immutable Laws of Marketing right now, or listening to it, because we've established I can't read. That said, in listening to that book, one of the things that is very clear to me, based on a few of the laws of immutable laws of marketing, is differentiators. How do you differentiate yourself compared to your competitors in an industry that's so black and white, numbers on paper?
People first. If you can be eye to eye and meet somebody prior to setting up an idea instead of over the phone, video chat, something to personalize this. We've done that a long time ago. So we do a lot of lending out of state as well. So I can't come in and knock on your door and have coffee with you. But I think it's important for you to know as much about me as I'm going to know about you. So crossing those lines where your clients, you guys came to that party I had, that post-holiday party.
Yeah.
Yep.
Majority of those people were clients and agents. But I think
And a majority of them were doing drugs. It was fucked up, man.
that's besides the point. It's been a rough year.
Yeah. Last year was tough.
But when you have the bonds with these people when you can call up and instead of saying, this is Garrett Atkins from Homestead Financial Mortgage, instead, hey, it's Garrett. And in any way you need to do that, there's no roadmap. But why do certain people have a lot of friends? Why do people are easier to make? It's not the product. You can teach anybody to sell anything. Just learn the dimensions and installation times and whatever.
Sure.
But people buy from people. So the most successful people in our organization are people that are very easy to talk to.
Yeah. That's How to Win Friends and Influence People by Dale Carnegie. People deal with people they know, like, and trust.
I was about to say,
And
it's
that
right out of
applies to
Are you guys
everything.
taking kickbacks for all these plugs you're doing on these books?
Yeah. No.
I need to get myself one of these.
Audible's our sponsorship.
Yeah.
Promo
Not
code
yet, but
St. Louis
hopefully
Podcast.
soon.
Yeah. Audible. Shout out.
Yeah. Maybe they'll pay us. But yeah, no. People buy from people they know, like, and trust, which brings me to my next question. In the mortgage industry, it's pretty well known that the entire industry is ass backwards, where a consumer will go to a real estate agent first with an idea of the house they want to buy. Nowadays they'll go on Zillow, which, by the way, is a terribly inaccurate website for real estate browsing. Nonetheless, that's not going to hurt their market share. But just letting you know, people go to Zillow, they see a house they want, they reach out to a real estate agent, or they fill out a form on Zillow, which I believe is a real estate company now, unless I'm mistaken.
It's a mortgage company as well.
Mortgage company, sorry. And then the real estate agent will be like, okay, we need to find you a loan officer, make sure your credit's good. They'll be plugged with a loan officer. And then if their credit sucks, sometimes they'll go to a credit repair company, or they'll frankly just be kicked to the curb and told to come back when their credit's better. That's ass backwards, where it should be, even though this probably will not change, which is why personal branding in the mortgage industry is so important, is they should go to the credit, work on their credit first, then go to the mortgage guy, get pre-qualified or qualified for a mortgage, and then go and look at the houses they can afford based on the pre-qual. So that said, in your industry, how do you differentiate yourself when talking to real estate agents, the people you need to build relationships with to get leads? Because I know there's many ways to get leads, but that's one of the main ones. How do you differentiate yourself as a personal branded expert on mortgages to help you build relationships with real estate agents? And maybe not just you, but any tips you preach but may not practice too. Like, what are your tips out there for people like yourself?
Competence and speed is big with real estate agents. The same way, pick up the phone. Is it 8:30 at night? I think a good loan officer who works in the referral side has to have a family that understands that sometimes family time gets interrupted because the hot times are on the weekends.
Amen to that.
Or in the evenings.
Mm-hmm.
So during the day, it's, primarily for me, we run a company. But meeting with clients and meeting with real estate agents, that's really more towards the evenings when everything gets hot because people work all day. They're going to look at homes at night. They're going to look them on the weekend. So one is being available. And then two, speed. To give a client an approval, a pre-approval where they're shopping as cash. Within a few hours of after speaking to them, the best compliment you could ever get as a loan officer is for your real estate agents to say you knocked that out of the park.
Mm-hmm.
Yeah.
And make them look good. It's always the extension of them because that's where it's coming from.
Yeah.
Know your numbers. If I had it my way, if I control this, know your numbers first, and then we could hand out that pre-approval saying, Eric, this client is approved for $200,000. That's it. Happy haunting, and this is the area they want to be. That way, everybody's time is well served.
Yeah.
They fall in love with it, and then everybody's got to fit a round peg into a square hole. You get a young loan officer, gets an opportunity to try to impress an agent on a file that they can't close, or it's something just so difficult, so they're banging on the home team to make sure that this happens.
Sure.
So they're pushing on an underwriter, trying to get an exception. And what happens, you got a deal that doesn't materialize, or a deal or a loan that doesn't produce properly. So it's difficult, but getting all that information and being quick about it and having the right resources to ascertain, do I have a file? Can I make this happen? Is probably the best thing you could do.
Sure.
And never lie.
Yeah.
True.
Never, ever lie. Just tell them you can't do it. Be quick about saying I can't do it.
And piggybacking on that, you look great today.
Do I?
Yeah.
How so?
The blue in the eyes, as I was saying before the podcast.
I'm not going to lie to you. I'm not going to lie to your face,
See, that's sad. So we're probably going to run a little bit over because I have a few more questions. So I'm sorry, Matt. I haven't really ran over before. That said, I was waving at our producer, Matt. He's awesome. That said, right now, you took witness to it. We're recruiting because our company's growing. I'm dabbling in recruiting people straight out of college, or since I didn't graduate college, sometimes I'll talk to people who didn't graduate college. But my question revolves around recruiting younger people who are younger than the millennial generation. How has your experience been doing that? Just be blatantly honest. I know we're not ageist. There is no such thing as a true blanket statement. That said, my experience has been poor, and I am still trying to figure out how to properly weed through applicants who have been raised in an environment surrounded by technology where they had iPads and iPhones in their hands. The way they're learning is different. They just have much different thoughts than me and you on business and a lot of things.
It's a loaded question.
That is why I asked it.
With an even bigger answer. I was telling you earlier about a loan officer who is a very bright and shining millennial, 26, 27. I don't know what the cutoff is. What do you call below millennial? What's the new one?
Gen Z or Gen X? Gen Z.
I'm Gen X.
It's Gen Z. Yeah, it's Gen Z.
So my daughter is Gen Z, and she doesn't know what she wants to do, but she works hard at the job she's at now because she understands simple economics. If I want things, I have to work for them. That's what she's learned.
Not everyone knows that.
Not everybody. I think an interview doesn't always cut it. I think you find by a trial period. So we're very big on 30-day trials.
Mm-hmm.
So there really isn't an offer on the table. There's a compensation that's hourly based upon what they think they can do, what they said they can do, and what we want them to do.
Sure.
It doesn't always work, but you're held harmless that way. No, there's no harm, no foul. This didn't work. Here's your check for the week you worked. I don't see millennials being as interested in my industry as much as I see them more interested in the real estate side. And
I can see that. Yeah.
And what you're learning the most is...
well, the real estate's glamorous. And when you're young, you want to chase the glamour and the glory. I feel like that's why.
I feel like a lot of it has to do with the investing side as well, though, like wholesaling, investors, flipping, etc.
Yeah. You got Gary Vee out there telling everybody that, it's not 9 to 5. But here's the thing.
Be patient. As long as you get it done by the age of 120, you're golden.
Hey, just have fun. I own the Jets. I'm going to buy the Jets. But you got to be happy first. My ass. Who said that? Guy who owns his own jet always says, just be happy.
Yeah.
Right on, Gandhi.
Mm-hmm.
But what I do find is, if my train of thought serves me, is real estate looks glamorous, tremendous amount of profitability, big margins per transaction.
Yeah.
Some of the agents that I work with that are very successful by anybody's standards, the reason why they're so successful is they just work. They work and work and work.
You hear that? Hard work.
They look like it's easy, but this was the report that came out published by a guy I follow in the mortgage industry, who what he had said was pretty interesting, is that the youth is bringing in all the applications through their social media. Exactly what you have always preached. Mm-hmm. They don't know what to do with it when they have it.
Yeah.
They have diminished social skills. They don't know what to do with the file.
They don't follow up.
It's not just that, they don't know what to do. Where we, the older person, can take that file, I can tell you exactly what bank it's going to, what could be the downside to this, where it could be an issue. So, they work hard in a capacity where I think they're looking for more of not a 9 to 5, but make money when I need to and control my life. Now, I don't know how true that is. I know everything you see on social media, like a Gary Vee, says you don't need to work for anybody.
Yeah. That's not the case.
Just do your affiliated marketing, right? Just do affiliated marketing. You'll be a millionaire.
That's actually something I do want to interject.
Or join my MLM.
There's such thing as a DISC test. It's a DISC test. And
what do you think I am?
You're a D.
DI?
You're a DI.
I'm an I.
Yeah. You're a higher I, but you have D above the bottom line for sure. And then your S is down low. You don't get phased by risk, and you don't overanalyze things too much. Although I do know personally you are analytical in the correct ways. But C is about kind of overthinking things. Yep. I'm a DC myself. That's why I sit in a corner and don't talk to anyone and just talk to the same people I've been talking to my whole life, and that's it. That said,
it's good for networking.
80,
not so much.
Over 80. Yeah, that's why he does it and I don't.
That's why the DI over here is in charge.
Yeah. That said, over 80% of the population is high S. They make up, and I mean this in the nicest way possible, they make up most of the regular workforce. And that's quite literally, it's built in their DNA. S stands for safety, stability, security, a job, benefits, 9 to 5, salary, hourly wage. So even though Gary Vee, he's actually part of the reason he convinced me to start my own company in part, because I listened to a lot of his content back in 2016 when he really first started.
To an entrepreneur, it's rhetoric.
Oh, it's fuel.
It's poison to people who are S's.
Yes, exactly. And 80% of the population
do a double flip off a backboard that doesn't know how to swim.
Yeah. So basically 80% of the population listening to him should not be doing any of the fucking stuff he's telling them to do. You know what I mean? So that's one thing I wanted to put out there is everyone, that doesn't mean someone with a high S can't start and successfully run a business. I know a high S that is my business partner in one of my businesses, but he has partners that take care of the stuff he isn't good at. Mm-hmm. You know what I mean?
I feel comfortable saying this. I've been saying it for a long time. It's not something I would get out and just post, but I grew up in New Jersey and we have a different way to figure out who you are. Where out here, it's what high school you went to. But I think in all honesty, what I have found is that I grew up middle class, so did my partners. And anybody who's been very successful in our organization never really had any money to fall back on. So what I try to figure out when I'm interviewing somebody who's young is, did they come from money? And if they came from money, I don't have a lot of faith in it.
You hear that, Clayton? It's only fuck you.
My boy Clayton.
No, he's literally, I agree with you. I feel the same way you do. Clayton Atoli is the only exception.
Has he spoken to any women yet? Let's just get down to the real.
Clayton, we're going to have you on the podcast and talk exclusively about women in your love life.
Is he dating anybody?
No, he was dating someone for a few years.
Well, how did he get introduced to him? Because he has to talk to somebody.
They worked in the same building.
Someone else introduced them and made it happen.
Yeah.
I love that kid.
So do I.
I root for him all the time. God, I used to sit there and go, "You've got this."
Yeah, I mean,
it was like swingers.
He has such a hard life.
I can't kill the bunny. I can't kill the bunny.
Yeah, but he's got a hard life. He just has to sit there, and by a certain age, his trust will kick in and be a millionaire anyway. So that said, we are approaching the end of the show. Is there any last things you want to ask, Greg?
No.
Okay.
I think we covered a lot today. I'm pretty happy with this.
I wish we could go longer, but I think
conversation.
Matt is death staring me, and I don't want to look over there. That's it.
Why did he take his shirt off?
I think he just is that slit throat or is that cut? Like cut?
Yeah, I think he's threatening us with the blackmail of the hot mic earlier.
That's right.
So that said, Greg, before we wrap up today's episode, what social media profiles, business of yours, etc., would you like to plug for the audience to go out and follow to learn more about you? For example, I know you just got verified with the blue check mark on Facebook.
I sure did. So recognize.
He's a big fucking deal.
Don't you look directly at me, anybody.
That said, what would you like to plug for the audience?
My company is locally owned and locally operated. And what we specialize is we are in the people business, but our vehicle is through residential finance. If there is a question, if there is ever a need to understand what might be happening, we would love to be a source of any of that. It's not really about doing the transactions as much as understanding what a person might need or a question that they might have. We would like to be that source of information for everybody.
Sure.
And I'm blue checked.
Yeah, he's fucking verified.
And I'm waiting for my website, which is taking forever.
You hear that, real estate agents? You're not going to find another blue checked mortgage loan originator. He's right here. Only one.
I can't believe I passed.
All right. Greg, Eric, that's all the time we have for today. However, the St. Louis podcast will be back next week at 7 a.m. Central Standard Time, CST, with a new episode, new guest, and unfortunately, more of your host, Eric Brown, and myself, Garrett Atkins. It's been a pleasure speaking with you today, Greg, and a pleasure hosting this podcast for the people of St. Louis. Until next time, this is Garrett Atkins. Stay classy, San Diego.
St. Louis.